Good morning friends and welcome to the pre-market view. We are entering into a crucial season from a financial results perspective, both in the US markets as well as back home in India. And talking about the global markets, US markets were marginally up as we had some negative data on the trade deficit front, which has actually shot up to almost $48.7 trillion, and it was much higher than the market expectations. Also, European markets were flat, no major data points. Talking about the Asian markets today morning, Japanese markets are shut today, but the rest of the Asian markets are marginally up, particularly Hang Seng, Taiwan and Korea. All of them are showing marginal gains. Back home, the SGX Nifty is suggesting that we are going to have an uptick of almost about 5 to 7 points. But on Friday, we had extremely positive surprise coming out from Infosys, as it reported much better dollar organic growth for this quarter at about 4.8%, which was much higher than expectations. Also, the company improved the guidance for the next year by about 1.5%. That led to strong buying in Infosys, and also there were short positions in the market, and the stock was up almost about 15 to 16%. We will try and give you some kind of a clarity on how much more upside one can expect given this better guidance for this quarter, and what kind of valuation gap exists today between TCS and Infosys. On that note, let me invite Shaival to take us through important F&O cues, data and strategies that we could have in the F&O market.
Good morning friends. We've seen in the Friday's trading session that the IT giant Infosys has delivered better than expected results, and due to which we have seen overall IT pack has performed very well. But on the other hand, we have seen weakness across the market, and due to which the markets could not rise very much on the higher side and has slipped below 6,000 mark and closed below that. From past couple of trading sessions, we've been seeing that mixture of closure of short position as well as long positions has kept Nifty under pressure, and has been continuously hovering around the mark of 6,000 and has finally given a negative close. Talking about the implied volatility, we have seen that it has decreased marginally, or say negligible, or almost remained flat. On the options front, we have seen that on the put side, 5,900, 800 and 5,700 put option has seen a good activity, whereas on the other hand, the same strikes on the call front has also seen a good activity. So going forward, these levels would be very important to watch on. Whereas on the call side, we have seen 6,000 and 6,100 call option seeing a good activity. Going forward, 6,000 would act as a hurdle for the market. To be precise, 6015, which is a weekly VWAP, would act as a hurdle for the market. As we are trading below this, a bias for the market is negative, and on higher side 6015, as I said, would act as a hurdle, and on lower side we are expecting 5,950, 5,900 in the coming days. Talking about the stocks, Chambal Fertilizer is looking negative, so one can maintain a stop loss of 69 rupees 55 paisa. Power Grid is also looking weak, so one can go short with a stop loss of 115.35. And Dena Bank is also looking weak, so one can go short on Dena Bank with stop loss of 122 rupees 75 paisa. Thank you.
On Friday, friends, we had a strong up move in the Infosys, but the rest of the market was extremely weak, and the breadth of the market was extremely poor. And in fact, the mid-cap index saw a weakness of about 2%, and most of the stocks, including banking, capital goods, and some of the metal stocks, saw weakness anywhere from about 1% to 4%. So overall, sentiment-wise, the market is not looking too great, and as I said earlier, we are entering into result season. Apart from that, we have important inflation data which will be rolled out today, and on the 29th of Jan, we are going to have an RBI meet where there is going to be some kind of a clarity on whether we are going to have a rate cut or no. So let's look at the important events and news that we are tracking today. First of all, today inflation data is going to be out for the month of December, and the market expectations is that it could be about 7.37 odd %. So this will have implications for the overall market sentiment and the banking sector. So inflation data below 7.3 would be definitely a bit of a positive for the banking sector, and anything above that would actually be a bit negative. For PSU banks, some positive news, as the Union Cabinet is likely to take up the issue of the holding company for PSU banks to facilitate the capital raising. So if this issue gets through the cabinet, then it will be positive for the PSU banks like SBI, PNB, Bank of Baroda, Allahabad Bank, so on and so forth. Infosys, I talked about it that it surprised the market. The stock was up 15 to 16%. Company has also upgraded the FY13 guidance by about 1.5% to $7,450 million. But looking at the quarterly numbers and the management commentary, most of the analysts have turned positive. But since the stock has already run up by about 17%, we have put a hold rating on the stock, and we should try to accumulate the stock at any possible dips over the next couple of days. CMC also came out with extremely good set of numbers, and the revenues were up about 7.4% quarter on quarter to about 493 crore, and the net profit was in fact up almost about 24% quarter on quarter. They have added 26 new clients across the geographies in this quarter. So overall good set of numbers for CMC. TCS will be announcing the numbers post market today, where the expectations are that at the net profit level there is going to be a minus 2.7% growth at about 3,417 crore. But in terms of the dollar revenue growth, it will be about 3.5 odd percent. Also, the margin is likely to be at about 26.5. Given that Infosys has already surprised the market, market is keenly watching out for the TCS numbers, because it has been outperforming the TCS to Infosys. So these numbers are going to be extremely crucial. ONGC's multi-billion-dollar Venezuela oil field has started production, and initially the company is looking at doing a production of about 30,000 barrels per day, which could be increased to about 90,000 barrels per day eventually. Positive for ONGC, one can go long there. So the stop loss of 286 and a target of about 301 to 307. Jyoti Structures venture with Abu Dhabi National Energy has acquired a stake in a Himachal Pradesh hydrocarbon hydroelectric project. This is positive for Jyoti Structure. One can go long with a stop loss of 44.1 and a target of about 46.5 to about 47.5. GAIL India plans to spend about 9,000 crore in capex over the next fiscal. Overall positive for GAIL India. One can go long with a stop loss of 357 and a target of about 375 to about 382. Some negative news for Hero MotoCorp, as the meeting between the management and the Gurgaon workers have failed, as the workers have rejected the management's offer to increase the salary by about 6,500 rupees per month. So one can go short on Hero MotoCorp with a stop loss of 1872 and a target of about 1780 to about 1743. Arsha International, which came in for a lot of selling pressure over the past few sessions. So there is some update that the management is close to raising about 130 crore to revoke the pledge of shares and infuse fresh capital in the company. Remember, the stock was down because the company failed to pay salaries to its workers, and also it did not get about 80 crore kind of a loan. So some weakness is likely to persist in Arshia counter for next couple of days. That's it from all of us, friends. Have a nice trading session and see you tomorrow at the same time.